everybody. Welcome to Nirmal Bang, and we are once again back bringing you a conversation which is very much in flavor. There are a lot of global events which are unfolding right now. Chinese market has once again opened up, and that also indicates there is going to be a lot of demand for the global commodities. We also are seeing some good action, positive action in terms of the equity markets, and we have been discussing about it over the last hour, few conversations. Also, it's the start of the year, a lot of fund allocations happening. Inflation, perhaps, which was a big news last year, middle of the last year, we have started seeing some softening up. I've been looking at some numbers here, the PMI numbers, the manufacturing numbers for the USA, and that has not been painting a rosy picture here. So perhaps the question comes, are we seeing a more slowdown, and is that actually going to emerge as an indicator of softening up of commodity prices, or we are actually going to see a sort of pent up demand and the commodity prices can go higher? And in this conversation, we are especially focusing on crude oil. What it implies, it's a big indicator for Indian markets also. So for that and for knowing about it more, let me now welcome a renowned expert on crude oil and commodities and currency, Mr. Peter McGuire, CEO of XM Australia. Peter, as always, it's a pleasure seeing you back and hearing from you on all the commodities.
Well, it's wonderful to join you, Piyush. It's been a while, and our friendship goes back many, many years. So we send you a warm greeting from sunny Sydney on a Wednesday afternoon. How's everything in Mumbai?
Well, it's catching up here. It's a cold weather, but looks like the markets are heating up. So I think I'll start with from that aspect here. And it has been a sort of a seesaw movement in the commodity markets. If we see over the last 3 months, it has been showing us that perhaps we are actually going down, and we perhaps actually are seeing a softening up of crude prices. We actually are seeing softening up from the perspective of US dollar. Over the last 1 month, we have seen dollar index has corrected more than 10%, and we also saw a softening up in crude oil prices. Now in January, we have seen a rebound. Just if I look at Brent oil prices, that is up more than 8-9% from the recent lows. So firstly, what are you making up of this volatility in the Brent oil price?
Well, Piyush, I think, if you look at a chart and we put our mind back over the last 6 months, and it's a good window. I mean, I don't really want to go back too much further, but the last 6 months demonstrates a lot. I'm just looking at the chart here for Brent, $110 of what we saw in that July summer period, Northern Hemisphere summer, July running at about 110. We saw a low going all the way back to, November, late November, and everyone was saying, well, now it's all, all the heat's taken out of the market. This is the new normal, $75, $76, and, it's showtime. Well, since then, really, it's been that strong rally that really started around Christmas, leading up to Christmas, I should say, and then it tailed off again in the late part, early January, and then all of a sudden, as we know, we've nearly hit 88.5 for Brent over the last 24 or 36 hours, and that strong demand picture coming out, naturally China opening up, Asia, you can't really discuss Asia this week due to the Lunar New Year, and we wish them all a Happy New Year. But everything's shut down, so it'll take another week till we get back on track and really start to kick into gear. Now that positive move to the upside, as you mentioned, the cratering of the US dollar index sitting at the 101 handle, and that's really seen some dramatic push down. And I think everything else, all the commodities, base metals, have certainly been bid up strongly. And don't forget that gold has as well. So it's been a very interesting couple of months, Piyush, and I don't think that excitement's going to wane anytime soon. I really think it's going to be an exciting time for traders over the first 2 quarters.
Absolutely. So from the dollar perspective, what is the view right now? We have seen the peak of the dollar, and are you expecting some more softening up? Are you expecting the dollar index to go down further, some more strength in the euro, or maybe some more strength from the emerging markets, or that's it? The rebound was due and it has already happened.
Well, I won't be surprised to see, remembering that we've got a blackout for the Fed, any news from the Fed, that 10-day window. So we'll get some, it'll be, I'm not saying a surprise on the 1st of February, but they understand. They're looking at the metrics. They're looking at all the numbers drop there. As you mentioned, the PMIs, they're looking at equities. They're looking at forward earnings. You've got all the earnings coming out. The big ones play this week in the US. So once we get the release of all of that, and certainly into next week, that'll give the Fed something to chew over. Higher energy prices aren't their friend. They certainly wanted cheaper energy prices, not higher energy prices, because the direct impact that has to inflation. And I won't be surprised. I mean, I'm hearing a number of analysts coming out and saying 115 or 1.15 for the euro dollar. So maybe that's the new handle. We're at, around that 1.09. It's been a solid move to the upside for the euro, and maybe there's got more horsepower for the euro zone with interest rates, and maybe we're at the end of that cycle. Well, we're getting close to the end of the cycle for the Fed, but we'll just have to see how inflation materializes. And if I just make one point, I think we're at 6.4% inflation for November in Australia. Then that might have been October. Then November, we went from 6.4 to 7.3, and we just got an inflation read today for the December, or the latest read, I'm pretty sure it's December, was 7.8%. So we've in two months, we've gone from 6.4 to 7.8, and that's not a good sign. We're expecting analysts that really shot to the upside. Analyst expectations were around 7.6, and to hit a 7.8 handle, we might be at 9% by Easter. So that's just a domestic feel as far as Australia. But if we get inflation start to kick up again, don't be surprised because of the cost of all goods. And it's going to be a wild couple of months or couple of quarters.
So then I'm trying to match up here. So if inflation perhaps has some more legs to run, whether it's Australia, USA, or India, whatever, and if actually we are seeing, I just had a look at the US inventory data, the crude oil inventory data, and that was showing an increase. So that's not at all bullish for the traders in terms of crude oil. And if I match up these two aspects here, that perhaps central banks don't have levers to really cut the rates because inflation is going up, so they are likely to increase rates at least.
Yes.
So that implies that, okay, if the Fed increases rates, dollar has some support. Inventory data is showing that there's a buildup happening. And then we actually are looking at the crude oil prices. So are you expecting that perhaps there could be some softening up in the crude oil prices in the near term? Or you're expecting that the Chinese demand is enough to take the crude oil towards $100 again?
I hope it doesn't hit $100 again, but I do say that the Chinese demand will be very strong, and we can't get away from the issues that the central bankers face with, in the inflation story and rates and how they're going to manage all of that. It's not an easy task for them. I understand as far as inventories, and you've only got to look at the situation from a producer standpoint and what OPEC's saying. We're conscious as far as Russia. We've got our mind set as far as what those cuts are going to be, and they're maintaining those. So I think that from a trading perspective, I won't be surprised that you see a lot of speculation for higher prices, and I won't be surprised that you see a push from producers to want a little bit of a higher price, because that US dollar comes off. If they're getting paid in dollar, then that's going to be a handbrake for them, and naturally they want to earn more, not less. And if the dollar slipped by 10%, well, they want to make it up on the other side.
Right. So I can then guess that you are on the bullish camp. Would that be a good assumption, Peter?
Well, Piyush, I mean, I don't know whether I'm bullish, and I don't know whether I'm bearish. I'm sitting here since really the start of, or this time last month, which was, it was Christmas, 25th of December, 25th of January. And I was sitting here going, is 75, is 80 the number, and we're nearly at 90. We're back a little bit now. So there's been a lot of surprises for the first 3 weeks of trade for the year, and it's hit everyone between the eyes, the COVID rhetoric coming out of China. Now, the base metal's been strongly bid up, earnings, and the recessionary fears biting into Eurozone, UK, and, of course, the US, and, US business activity at contracts in January. Europe records expansion for the first time since June. So, there's very mixed signals across the Northern Hemisphere landscape.
So Peter, I know you long enough. If you're not taking a strong directional call, it implies that we don't need to jump right now. It's better to assess, right? Would that be a fair statement?
Yes, I think it is. It's a time to assess. It's a time to, just look at what central banks are prepared to do next week. And there's the inflation reads and PMIs, and, everyone's been short dollar, and it's been an almighty trade over the last couple of months, long crude, long gold. So, if you didn't make $1 in the last few months as a trader, then have a close look at what your strategies were, because there have been some explosive moves, and sometimes it's just a consolidation for a couple of days to get a good picture as far as what the next thing is. And I'm waiting to see what the Fed does. I mean, everyone's sitting on the edge of their seat saying what happens on the first.
On the gold, I think for our viewers, I know Peter long enough to say that Peter always is absolutely very strong, very frank on his call. So what Peter is saying right now is very clear. Wait for some more signals, because the move has already come. So I think let's get some more cues here. On the gold, Peter, what are you rating? What are you making out of 2 months, 3 months, almost 18% strong up move? It has been a ballistic up move in the gold. At the start of the year, can it again outperform for the next few months, or we have already seen the move here?
Well, it's just been dynamic. I mean, you're nearly through that 1950 sort of handle. I'm just getting a chart up here on my little. It's 1950 at the moment. I think it's hit everyone by surprise, the aggressiveness of what we've seen since late October, November, and how it just cratered. And it was a race to the bottom. We experienced that the end of October, start of November, and you were sitting at that 1630 handle, and all of a sudden we're up $325, $320. I mean, that's, it's up, as you said, 18, 19%, 20%. It's been incredibly bullish, and it's nearly been on a chart like that, so, like that. So it gets to a point that, again, that US dollar came off, gold and silver have been dynamic, and will it last? Hey, I don't know. Maybe traditionally when you see markets rise as aggressively as that, they become a little bit exhausted in their moves.
Yeah. But there's a cool off always.
Well, there could be, Piyush, but at the moment, it's 1950 and it's knocking on the door of 1960 saying, hey, I'm coming in, so I'm not going to stand in the way. One thing you never want to do is stand in the way of a bull market. It'll stampede you to death. And that's what gold and silver have represented over the last couple of months. And we're now at the end of January nearly. And when you're looking at that move, it's nothing short of breathtaking. So how much further? I'm not going to be surprised sitting here at 1950 for it to take 2000 out again. I'm just not going to be surprised, because I think it's got the momentum, and whether it does it, well, that's a different thing. But it's certainly got a lot of horsepower behind it.
Sure. So gold basically has the positive momentum behind it. Crude, actually, we need sort of more cues to really understand what's happening and where it's going to go ahead. I want to ask you one question. I think a lot of traders will be actually thinking around it, at least for the first quarter of this year. We have seen a lot of efforts in the international consortiums. We have seen, again, some price restrictions has been put on Russia. Whether it's working or not working, I'm going to ask that. OPEC basically has not been sort of taken any major effort really on the crude here. According to you, why basically the efforts around the Russian price control has not played from a market perspective? Why the crude oil prices have remained resilient? Is the demand really so strong on the ground? How are you reading it fundamentally?
Well, that's a tough one, because there are many moving parts to the Russian energy containment, because their agenda, and they're very, very strongly aligned to OPEC, and we're conscious that their energy is sold on many different markets, and where it moves from here, I don't know whether they can actually contain the Russian crude and the Russian price. I mean, even that's going to be interesting how that plays out in time. So whilst you talk about sanctions, or you talk about agendas, political agendas to stop, Russia trying to get fair value for its product, I think that there are many consumers globally, being countries out there,
Who will like to buy it?
deal.
Yes, absolutely. I can read what you're saying. You basically are saying that that is not going to work because it's getting sold at so many different markets. So perhaps that's the one sort of you're saying. Moving towards the Fed commentary, what are you expecting this time from the Fed? Is there anything sort of major sort of surprise which can come, or largely the market is already pricing everything in advance? How are you reading the markets? And also what perhaps Fed could be bringing out?
Well, I think I won't be surprised to see 25 basis points, but equally I probably wouldn't be surprised to see 50. They're going to look at the PMIs. They're going to look at the overall economy. They're seeing the data read daily as far as consumption patterns, retail sales, credit card usage, unemployment numbers, hourly wage, earnings for the largest corporations. So they've got all the data, Piyush. It's not as though they're going in blind and they're going, oh, which number? They've got the data. They see the data. They've got people crunching numbers far smarter than me, that PhD sitting there and looking at strategy, and also understanding interest rate policy with inflation. Are they going in too hard? Are they managing inflation? So, you get those reads from all the other countries, and they take on board the headline numbers. They're trying to manage that fine line between growth or continued, or how deep this recession is. And, they're understanding the numbers coming out of home sales, you name it, everything they're keeping an eye on. So I just want to see where the market drops.
You're expecting an interest rate hike?
Yes, I am. And I won't be surprised, 25 or 50 basis points. But I think that they've got to be careful, certainly after this one. But if inflation isn't under control, then I won't be surprised to see, quite a few more.
Okay, so let's round up our entire discussion, and let me ask you my last question of the discussion. And that would be, if I want any of your top 1 or 2 picks for the trade, for whatever you like, 1 month, 2 months, 3 months, 6 months, whatever calendar you like, currency, commodity, anything, what would be those sort of trades?
I'm keeping a close eye naturally on gold. It's not a time to short equities, US equities, but I'm very careful with them. And I think that the next couple of weeks will be very telling. And yeah, I'd have to be probably long energy. Yeah, long energy. And that's and this is all over the next month or so. Keep an eye on where the dollar is, US dollar naturally, and currencies. So that's the Fed story and how aggressive they're going to be and whether that's already baked into the value of the dollar. So, Piyush, it's going to be a very interesting lead up to the 1st of March. And I think February could present itself with some wonderful opportunities.
Quick one. Anything on currency? I'm tempted to ask you because I know you're extremely good at that.
US dollar off continues to possibly soften, go to 100 handle. I don't know whether it'll break 100 and go to 99, but I think that there's a little bit further softness. But we've seen such a big move and possibly a stronger push up for here for yen and for euro and pound.
Well, Peter, as always, it's always a lively interview with you. Thanks for all the insights, and we'll keep catching up with you in the future. Thanks a lot.
I look forward to it, Piyush, and take care, my friend. Thank you very much.
Dear viewers, so that was all on the currency and commodities. Thanks for watching us. With that, it's a wrap on the show.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.